The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 16th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in any set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, that's not a problem. You can always let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow, 62 points, 24,767 is the print. That's 0.25% to the upside. S&P is up 0.5%. That's 12 points. NASDAQ 100 up 0.7%. That's 46 points. Russell 2000 up 1 percentage point. That's 1%. That is 16 points. She's trading a new all-time high, 1634 as we speak. The Russell 2000, Stevie, and it's not just it's me, but it's really because of the signals inside the Russell 2000, now has a new long-term target. We didn't have a long-term, well, we did have a long-term target, but it wasn't this. So what you and I know is that in our lifetime, yeah, that's the call. We know that the NASDAQ 100 is on its way to 8,800. NASDAQ 100, by the way, trading at 69.34. The Russell 2000 now today, just a while ago, gave you and I a new price target, and that is 28.73. It's trading at 16.16 as we speak right now. The semiconductors, can they close above the 2000? Well, above the 2000 high? Should they do that this month out here? Well, then they've got a huge run to the upside. But we have time to cover that. You've got the spot volatility index down 8% right now. That's off a buck. Gold's up $1.40. Silver's up 9 pennies. Leading the charge here to the upside. Booking Holdings up 18 bucks. Amazon up 15. That's about 1%. Churchill Downs up 4%. 13 buckaroonies. Chipotle up 11. To the downside, IDEX Labs up $7 and change. That's a little over 3%. Omeris Corp, OMER, down 19% or 470. IQ Via Holdings down $4. That's about 4%. Purple, Deep Purple Innovations, PRPL is a ticker symbol. That's up 30% or $3 out there. No idea what they do, but they're getting just simply trashed as we speak right now. All right, so what are the markets doing? Very interesting. Very, very interesting. So here's what we know, a couple of things. If we just simply take a look at the advanced decline oscillator reading, we're going to see that even in yesterday's move lower, they didn't get down below zero. That's the bottom panel of the first 3 charts on our screen out here. The reason that is important is because it's giving you, this is kind of a shorter-term market breadth tool and indicator. And there's really just a simple way to read this. When the advanced decline oscillator reading is above zero, and what it's doing is taking a look at the difference between the 39 and 19-day exponential moving averages. At least that's what it's doing on Stevie's screen out here. When it's above zero, it is buyers that are in control of the game, even with yesterday's push lower. When it is below the zero line, and by the way, panel number 2 from the bottom. I don't know why I can't get it to work here in the Dow, but there we go. We now have it in the Dow. You'll see that that line turns green to red. That's the summation index to tell us whether we're above 0 or below 0. So with regard to the New York Stock Exchange, NASDAQ Composite, and the Dow, each of them closed above 0 yesterday, still above 0. And with the S&P 500, you and I just simply utilize, one, because I don't have the data feed to be able to give me what the S&P 500 Advanced Decline Oscillator reading is. We can just simply utilize the spot volatility index. That works just as good for you and I. It's below the 50-day exponential moving average. That is really the key here. It's trading right now at 1347. 50-day is at 1655. If things are going to get romping and rolling to the downside, that spot volatility index needs to get above that 50-day. Now, it can't do it all in one shot. It tried yesterday at a 13% one-day rate of change at the close. There's not a single person in this audience that listened to yesterday's show that didn't anticipate that the S&P 500 and the ES Mini would be trading higher today. There's not a single one of you. Now, you may not have believed it when the Dow was down 260 points. You might have said, you know, that Steve guy, he doesn't know Jack. I do know Jack. Jack is a really great guy out there. And the other thing that we know is that when you have a one-day rate of change in excess of 10% and you're short, that sphincter muscle is going to start tightening. You've got to tighten your stops, especially when there are other patterns that say, hey, short-term bottom has formed out here, as the 30 and the 60-minute charts did yesterday. So what we're seeing unfold today, and when you get that one-day rate of change, I don't have that chart up on our screen, we can put it up on our screen out here. Let me see if I can find it. I know it's out here. It's just I've got a bunch of panels open, which sometimes is not a good thing to do during the show. Here we go. VIX rate of change. You can see the blue arrows on my chart, and you'll see that those represent days with a greater than 10% rate of change. And what typically happens, you either get a bounce or a bottom. A bounce or a bottom. So now it's up to you and I to try to figure out, well, how do we determine whether or not it is just a bounce or a bottom? And the one place that my head is turned to, if we can get back to it, is really the intraday time frame charts of the 5-hour time frame. And that's what I've got posted up on our screen right now. And what you and I can see is that we are trading above the top of their 5-hour TAS market profiles, which end at 2 p.m. So we have 45 minutes. So it's going to be really key. Where do these prices in the equity futures contracts close at 2 p.m.? If it's above 27.20 in the ES Mini, above 69.31 inside the NQ, above 16.0870, that's a foregone conclusion inside the TF. And the Dow, which hasn't gotten up there yet, it's 24.786. 3 out of 4 ain't bad out here. If you close above those, it's a pattern we haven't seen with regard to the tops that have come from these 5-hour charts since the end of January. And that's got to make you say, something to think about. We get back from this break. We're going to go out to Newport Beach, California. I believe we're going to be talking about Schwab. So maybe we're going to his house in Pebble Beach. He's got a nice place up in Pebble Beach. Most certainly does. Steve Rhodes with TFNN. We'll be right back. One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digests have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go out to Newport Beach, California, and speak with Garo. Garo, thanks for calling. How are you today?
I'm very good. How about you, sir?
I am very good as well. What's the ticker symbol that you want to take a look at so I can fire that up on our charts out here?
Yes, sir. It's Schwab. It's SCHW. Sam Charlie
Got it.
Henry World.
Got it. Okay. We've got the daily chart up on our screen. And how can I help you with this?
The daily chart is a little bit overbought, but it passed the swing point. I think it's on its way up. The weekly is excellent. So is the monthly. I needed your opinion, sir.
Okay.
And see if you like it, and if you like it, what's your target on the upside?
Yeah, sure, absolutely. Okay, so from a target standpoint, give me the type of time frame. Normally, you're more of a shorter-term style trader. Is that changed with regard to what you're looking at in Schwab, or?
No, I'm a short player. I just play by the day. I just go in 1,000 shares. I get out. I just buy another 1,000 shares tomorrow, and the day, and so on and so on. Perfect. But I don't buy it and hold it for a week or 10 days or whatever.
Right. Okay. So if we take a look at Charles Schwab right now, here's what we're going to do. I'm going to switch over to a daily, weekly, and a monthly time frame. And in this case, we're going to take a look at TAS market profiles. There's a brand new profile that formed today. So the conclusion that price is going to go higher in ticker symbol SCHW from a daily perspective would be confirmed by the TAS market profiles if they were to close above 59.37. It's a brand new box that formed. Let me just expand the screen. Let me turn off price out here, and that way you will be able to see what it is that I'm looking at. Whoops, I turned the wrong thing off. I turned price off. So you're going to see that today we have a brand new set of profiles. And the center line of this profile, 58.81, closer to the top of the box, 59.37. So I refer to it as a bearish structured box, and nothing more bullish than a failed bearish pattern. So should Chuck Schwab's company close above 59.37 today, that would just simply be confirming that a significant level of resistance failed. If we take a look at price and we take a look at volume, the most recent swing point out here took place on May 11, 6.4 million shares. You're already at 3.7 million shares today, so it seems like it's moving into that high, into the top of the May 11th swing point. So 59.94 should at least get tested, and currently it's trading out at what, 59.24. So that's what the daily looks like. If I look at the weekly and the monthly charts out here, they look very good. With regard to the weekly, well, let's just check the volume that was surpassed for the week that began March 12th. That was 36 million shares, and it was taken out last week with 32 million shares. Not exactly what you like to see. The weekly chart is setting up a potential topping pattern, and I'll go ahead and try to draw that. And let me just switch this chart. It's referred to as the 3 drive to a top pattern out here. And we can also see that last week price was moving higher, doing it with less relative energy. Those are just simply 2 caution signs, not necessarily anything that says, hey, this is a sell pattern. In order for this to be a sell pattern for Steve, then what you need to see is some type of bearish reversal signal. In this case here, at least on a weekly or a daily, we don't have that. Support should be 57.60 or right about there. So the daily says to me, if it can close above the level that we took a look at, that I gave you, the top of its box, price should not only test its highs, but likely even go higher. The monthly chart looks nice and strong. From a monthly standpoint, it's taking on a swing point that had 150 million. We're about halfway through the month. It's done it with 70 million. Monthly looks pretty powerful out here with regard to Chuck Schwab, the way that I see it. What can you add? Because I know that our listeners want to know what Garo is doing.
Would you buy it with your own money here? Yes or no?
No, I would not. I would especially not. Well, now you're in and out. You're in and out on. You're in and out on a day.
If you have the time, Steve, please check on XLF. The finance sector.
Yeah, let's look at it.
If you have the time. But no, I appreciate for your time and concern regarding Schwab. I appreciate it. Thank you, sir.
Okay, no problem. Thanks so much for calling. Now, when Garo asked that question, when I put my money in it, I wouldn't do it when it's so close to a top of a bearish structured box out there, folks. But in Garo's case, where he's in and out on a daily basis, it's a whole different trading scenario. With regard to the financial sector, we can see that there was a new TAS market profile that formed last week. And so resistance here, this happens to be a bullish structured box. So the exact opposite of what we looked at in Chuck Schwab's company. But in this case here, 2902 on a weekly basis is a resistance level. We can see on a daily basis out here, it also formed a brand new box today. Now, its box is basically equally distributed. And so this says that price ought to go test the area where it had gapped to the downside on March 22nd, and that's a level of 28.45. Now, look, the box that formed today, let me just turn off price, by the way, because this formed above a prior box out here. I guess I have to turn up those red lines, too. Let me do that. Those are the gap areas. The nuance here, as you take a look at where this profile formed, this is the first profile where both the high and the low is above the prior box out here. So the XLF, the message of the XLF, even though I've identified resistance zones, says that the XLF is turning higher. Says that you need to look at the XLF as a candidate that has formed a bottom out here. Now, if we come over and we take a look at the XLF using Stevie's other system, in this case here, it's the monthly that's going to appear on our screen, you're also going to see that price right now is trading above Stevie's red line on a monthly basis. Unfortunately, May 16th is not the end of the month, but there's nothing more bullish than a rising price oscillator, and that's what trading above Stevie's red line means out here. So if at the end of the month we're trading above, in essence, where we're trading right now, 28.27 on a monthly basis, that is going to be bullish. If we look at the weekly time frame, you've got resistance, 28.59. I'd say inside of the XLF, the key level to be confirming that it wants to trade higher, Garo, is to close above Stevie's red line. Right now it's at 28.59. We know that's going to change, but if you use that as a guideline out here, it's a really darn good one, because if that price oscillator turns up, what we just looked at, that's coming to us from our TAS market profile signals, what the monthly is doing out here, the XLF will have hit a bottom back on May the 3rd when it moved down with 68 million shares, which was really testing 74 million shares and testing 149 million shares. I don't know what page. We'll have to find out what page it is on Tom's book out there, The Art of Timing the Trade. But he coined that phrase, here comes another dollar for the kitty. If you can't bust them down, that's what the XLF proved, it's time to go bust them up. And that's what the financial sector in the S&P 500 is doing as we speak right now. You've got the Dow up 59, S&P's up 12, NASDAQ up 41 points, gold not doing much. It's up about 80 cents as we speak. Steve Rhodes with TFNN. We'll go field your questions. I'll check my email or something in the Tiger's Den as well, and anything else that you'd like. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. So just a quick clarification to something I said during that opening segment. I was referring to the 5-hour charts. We were looking at where price was trading in relationship to its task market profile. And the current bar that's in place is not going to complete until 2 p.m. We go off the air about 2 or 3 minutes before that time frame. So, but if price closes above the top of those boxes, it's a totally set of different patterns of what you and I have seen, as I said, since the end of January. To give you an example, I have the NQ 5-hour chart up on my screen. And if we go back to the top that was formed back here in March, on a 5-hour time frame, what you're going to notice here, just taking a look at profiles, is as price broke through the bottom of the box, in other words, support failed. That happened specifically inside the NQ at 1800 hours on March the 18th. And what you will see from that point forward until it actually made a bottom is price never closed above the top of a box. It tested the top of the box, no problem out here. You can see in this time frame, right around March the 26th, that bearish structured box, price bounces right up into it, bearish structured because the center line closer to the top. It just tells you where the sellers are sitting, they're camped out, and sure enough, that's where they went ahead and fired away, those that had a lot of ammunition back at that level. But you never saw a close above the top of the box. Told us which way the trend was in place. In fact, when there was a bottom that formed out here in April 4th, what we saw was never a close below the bottom of a box. Yes, one box was tested, a bullish structured box on April the 13th, but never closed below that level out here. You can see as we came into a high, again, a lagging tool, a lagging indicator, but nonetheless one that must be inside your trading arsenal out here to help you identify and understand what's going on inside the markets. Once price broke below the April 19th bottom of the box, that was the time, in essence, to exit that trade if you're just simply going to use market profiles out here. And you can see, so going up, going down, we can see how the tops and bottoms of these boxes work. Again, it's another reason to answer Garo's question, would I put my money to work knowing that we're close to a top of a bearish structured box? Would never do that. It doesn't make sense. Let it break out and then consider going long. Let a very bearish pattern fail. That just tells you how bullish the market would be. Now, yesterday, we can see that we had a nice failure of a bottom of a market profile on the 5-hour chart. And now what we've seen, the counter trend rally was to be expected, anticipated. You talked about it. You told me yesterday during my show that's what you would expect if we saw spot VIX index close above 10%. So you already knew that. We already knew that. But what we didn't know, and we still don't know because it's not 2 p.m., is price going to close above the top of its box out here? Because if it does, there could be real problems to the short side. I mean, real problems to the short side. And so I'm speaking to you. You just want to use that information. Just look at these patterns out here. And you may have a profit left in that short side of the trade out there. Just be careful. Be careful, because these patterns, these tools are extraordinarily helpful. In this case here, it's not just the NQ. It's inside the ES. The Russell 2000's got a mind of its own out here. The only one to not test or get over the top of a box is the Dow. And again, that price point is 24,786. Ruby in the den wants to go take a look at what's going on inside the Japanese yen. Ruby, I'm going to go ahead and put the continuous contract up on my screen. I hope that doesn't upset you much. And I know that you said that you were long. And if you went long, it may have been because yesterday was wave number 7, letter G if you're watching this on Tiger TV. Oftentimes at wave number 7. And we only know that we're in wave number 7. If price were to take out today's low, then it just extends. But if you were looking for a possible reason to go ahead and take a long trade, I suppose that would be it. But what I don't like, what you don't like about being long this trade, is you have a falling price oscillator below 0. And it needs to get up above Stevie's red line mighty quick. Right now, that's priced at 0.9129. You see, when price gets below that bottom panel, the price oscillator out there, you expect and you anticipate you're going to see a test of Stevie's red line. Look, price got down below that zero level on April 24th. It took about 5 or 6 trading sessions until May 4th before we saw that first test. But that test told you everything. A test and rejection, and then as such, the following days out there told you that it was sellers that were in control of this market. There is no other way to call this, when I take a look at the continuous contract for the yen, other than to say you've got sellers that are still in control of the market. Let's go try to find out what the market profiles might be saying to us. Let's go see if there's any other support out there for Ruby. And whether it's a 1-hour chart or not, at this stage, there's not enough of a bounce. But let's just go see what the 1-hour time frame chart says. I've got to be able to find it first. That should be very close by. It should be lurking. But where is it? There we go. So let's go take a look at the yen. We should be in the June contract. Is that correct out there, Ruby? Let's should have that here handy. There we go. So let's go take a look at the June contract for the euro. And on a 1-hour time frame chart, you've got to really see this thing close above the top of a box. Kind of just what we were looking at out here. And right now, that's priced at 0.9103. If you take a look at 0.91009, that's a 240-minute. You can see you're just consolidating sideways out here. It's risky. It's risky is all I can say. If I go back to that euro chart, let me see if I can find a real good reason. So let's put on a 60-minute chart. Let's hope that price is moving lower, doing less relative energy, or give us some type of signal. And it's not. Well, hold on a minute here. To be fair, I need to make one adjustment to one of my settings out there because we are looking at instruments that is not in dollars. So give me just a second to do that. I want to got to be totally fair out here. So let me change this. Oh, don't do that to me. Got it. Okay, cancel 0.005. Let's change it. Now it's changed. No. I know that's the problem, is I just don't, other than that daily wave G, Ruby, that's all that I've got out here. At this stage, nothing more than a bit of a counter trend rally. Where could that counter trend look if you stay in this trade? And I'm not saying you have to get out, but if you stay in this trade out here and you're looking at a 60-minute time frame chart, you see Stevie's dashed green line out here. It's from the high of the trading session at 1 o'clock in the morning. That's 1 o'clock in the morning. May 15th, so yesterday morning, that is a key level of resistance. So even if you get more of a bounce here, you want to see price get over that wall. That could be where a counter trend rally stops pretty big, and that's probably close to the daily Stevie's red line out there. So best of luck with being long the Japanese yen futures contract. Now, I mentioned to you the Russell 2000 and said, hey, Stevie has a new price projection. So let's go back and take a look at the Russell 2000. And it's a nice price projection out here because it's the same pattern that I taught subscribers last month. No, a few months ago. Several months ago. I always like to teach subscribers something new to put into their trading arsenal out here, just like I'm going to do next Wednesday on May the 5th. All the details are on the homepage of TFNN.com. We'll show you some of or a tool that tells you and me that money is flowing into the Russell 2000. Russell 2000 is not just breaking out in dollars, folks. And so volume or not, where money flows, price will go. You talk about supply and demand. There's a lot of demand for the Russell 2000.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we were talking about the Russell 2000, and interestingly enough, Michael wrote in, Michael P. He's in the TZA, bought it a couple days ago, and was asking the question, you know, should you sell now? Let me just give you a feel, Michael, for what I think the Russell 2000 is doing. Then you go ahead and you make a decision based upon that. First, we can see that it's breaking out above resistance. Now, if it closes over 1615.51, that's a key level. You're looking at the Russell 2000 index versus the IWM. I think this would be the better tool to use for you to make your decision. You're going to have a break above resistance, which was that key reversal session was that bearish engulfing from January 24th. That would say that old resistance, now 1615.51, could be or should be new support out there. So that's number one with regard to what the daily time frame chart is showing. Michael, if I put this on a monthly time frame, which I'll do, and I'm going to go ahead and change this to a logarithmic scale chart out here. What this allows us to do, especially in a vehicle like this, it allows us to go back to the highs in 2000. And then in essence, I could either use the high in 2007, but to illustrate the point and be a bit more conservative, I'm just using the 2014 and 2015 high out here. And that green line acts as a significant level of resistance or support. And what you can see really acted as resistance for a long period of time up until September 2017 when price broke above that. Now, when price broke above that, what the Russell 2000 was communicating to you and I was it was ready to go create new levels to the upside. In fact, any pullback should find support at that level. So interestingly enough, the January highs out here, we can see that the low in February tested and rejected that level. That's the 1436 area. That, in essence, is what I've doubled to give the longer-term price projection right now, right here, today. You can mark it on your calendar of 2873. It's the same pattern that is present back in 1929 out there, or 1924, where the Dow doubled, and many other patterns out there. So It's one of those tools that can provide us with a much longer-term horizon out here. Look, if we take a look at the low of last month of April, right to the T, that logarithmic scale. Many of you have charting packages that will allow you to change that up, change it from just a linear scale to a logarithmic scale out here. So now we're back to just the normal time frame. So it's looking awfully strong. But here's the deal. It's not looking awfully strong just in U.S. dollars. And we can take a look at volume. In fact, let's do that. But volume, just so we have things straight here, volume is only just one of the legs. I used to call it the four pillars. I'm just looking for it here. That's why I'm looking off to the left. Where did I put that? I think it's right here. Oh, man, let me see. Can I get that to pop up on the screen? Yeah. Here we go. This is our trading pyramid, or otherwise the four pillars out here. The four pillars being volume. You cannot, well, go ahead if you want. But I say you cannot make all your decisions based upon volume. That is like building a table and saying it's going to be like a unicycle. How balanced is that? You want more than that. You need to know supply and demand and volume and so forth. You also need to know momentum. And you can use a number of different indicators for that. You want to understand the volatility, whether you're using Bollinger Bands or standard deviations or whatever it might be. And you certainly want to understand energy. I love David White, Polar Bears, Power Law Vector Indicator out there. But there's other tools like the MACD, and I use that. That's what calculates our price oscillator. But these are just four dimensions. There is the fifth dimension that exists out here, and that fifth dimension is asking the question, hey, Steve, what is the Russell 2000 doing in terms of other currencies out there? So if we go try to figure that out, you'd think that I could immediately go right to the tab that had that. Well, there we go. Now we're immediately. And here's the deal. You see, you and I are not the only ones trading the Russell 2000. If that's what you think in today's day and age, then it's like being in the Flintstones day and age out here, and we're not there. In fact, what we are seeing right now as we speak at 1:46 in the afternoon, we're seeing the Russell 2000 break out in terms of dollars, break out in terms of euros. It broke out in terms of euros 4 or 5 days ago, breaking out in terms of yen. That's right, Ruby, it's breaking out in terms of yen out here, and it broke out in terms of the Great British Pound a week ago. It's all above every swing point high out there. If you want to understand where the money is flowing, just look at this chart here right now. If you want to use extraordinary tools to help you understand why the market is doing what it's doing, or answer the question, why is it going up on light volume? Well, now you have your answer. It's because the demand is greater than the supply. It is nothing more complicated than that. It is more complicated from the standpoint that you need to add and need to think differently. You need to use the tools that are most available to you and I. If we take a look at volume out here, we're probably going to find that this is a light volume test of a swing point out here. And that was a 20 million volume day on January 24th. You're at 9.9 million right now. Simple math says there's no way it's going to confirm a breakout in dollars. But I pose the question to you, because those folks that are trading the Russell 2000 over in Europe, doesn't matter whether it's in London or it's in Gay Paris out there or wherever it might be, or whether it's in Tokyo or Hokkaido, which, by the way, the best uni in the world comes from Hokkaido. Oh, the best muro guy, best giant clam out there. If you can get that, what you want to do is simply ask for the belly portion. In fact, when you're going to a sushi bar, just have them give you the belly portion of everything that that's being served to you, and you will step your game up to a whole nother level out there. So, folks, in the old days, we used to be able to say, yeah, it's testing a swing point on light volume. But those are the old days. And so what you want to do is you want to use other tools, additional tools that can help influence and answer the question why something else didn't work. I didn't say don't use volume. I said don't only use volume, and like a Rubik's Cube, go figure out what the market is doing. So, Michael, you're in the TZA. I've given you some data out here. Maybe if it fails up at that swing point by the end of the day, maybe it turns down. I don't know, but the Russell 2000 is clearly the strongest indice. I would rather you have said you were short the Dow, because the Russell 2000 is not the indice to be short. Of course, that's just one lonely man's opinion out here. Now, we've got other questions that came in by email, so let's go to those right now. One from Alex, and Alex is saying, have the Qs made a double top in January and March out here? So let's go take a look at the QQQ series ETF, and the answer to your question is no. I say it hasn't made a double top because really you'd have to get back to the March 13th high to be tested. Basically in a double top, and it's kind of bad vernacular to call something a double top anyways, because the only way a double top pattern can be confirmed is when the bottom swing point gets busted through. So even if you were going to go ahead and use the January 29th as your top, and you were going to say that the island top formation that occurred out here between March 9th and March 16th was your double top test. It's not a double top pattern. You never broke back below the February 9th swing point out there. So I hope that helps you out. Thanks for the question, most certainly. I see we've got another question in, but we're going to have to go to a break first. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So I think our last question for the day out here is comes from TigerTV, and the question was, what do I think of U.S. Steel as a long position? I'm going to tell you, I like it. I like it a lot. Why would Steve-O say that? Well, let's just go take a look at ticker symbol X out here, U.S. Steel. And the reason is because it made a bottom the way you just love to draw it up. You just love to draw it up this way out here. We can see that counting from the actual high out here from March 1st, 2008, we just start doing our wave count. We get to that 7th inning stretch, letter G, on the bottom of my screen as it made its low. What else was it doing? It was pushing lower with less relative energy. That's where you play Liar's poker, and you call, you know what you call with regard to it. And we could call the move lower and say, hey, you're over. Now, we couldn't say that it was over out here, HD, not until first May 3rd, when you saw a bullish reversal signal. You need to know your P's and Q's. It means you need to know your bullish and bearish reversal signals. All of Mastering Probability subscribers right now have on their members page an extraordinary 1-hour workshop that will explain to you the 7 bullish and 7 bearish patterns that you need. That's in addition to the workshop that I'm hosting next Wednesday, which you certainly want to be able to attend. And then it was on that very next day, and this was the workshop that I gave last month for subscribers inside of U.S. Steel. Price closes above Stevie's red line out there. So this looks very strong. Price now above a Tom DeMark 9 count. That was yesterday. That's like it's rolling strikes, going ahead and making a maybe making a 300-day. Now look, there's some resistance up ahead. It's got to get through this big wide-ranging bar and gap to the downside for March 22nd out here. But it sure looks like U.S. Steel has made a bottom. And if you get above that window out there, that next level of resistance, by the way, that's at a price point of 38.22. Very likely what we're going to see is price head to 42.74. And that is in U.S. Steel. Folks, hey, stay tuned. Don't just stay tuned. Come on over to the homepage at TFNN and sign up for David White's workshop tonight. That is going to be spectacular. Have a great Wednesday. I'll see you on terrific Thursday. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.